Alrighty, it's official. First Republic is donezo. They've been absorbed by, you guessed it, JP Morgan Chase. But don't worry, Jamie Dimon assures us that the banking system is alive and well. Everything is functioning perfectly. It's all going according to plan. Because, as we know, the true plan is to make sure that Jamie Dimon owns everything. That seems to be the natural conclusion here, because that's just what keeps happening. Every time that there's trouble in the banking sector, oops, somehow JP Morgan Chase ends up with a few billion more in deposits. They just keep absorbing all of these little banks. Now, what's interesting is First Republic was sold off and completely gone, taken out of commission, before anything was announced to the public. They did this over the weekend in secret, and they held a secret auction, and it's not entirely clear, what banks were involved. The winner, of course, was JP Morgan Chase. We don't know how this all went down. There's almost zero transparency with the whole process. All we know is that on Friday, First Republic Bank was an independent entity, and by Monday, it had been absorbed into JP Morgan Chase. And so it technically never went bankrupt. It was just seized, we're told, by the FDIC, or maybe it was it the California bank regulator? I can't remember who it was. But anyway, First Republic Bank was seized, we're told, and then fire sold to JP Morgan Chase. Now, JP Morgan Chase is going to take losses on the non-performing loans that have been issued by First Republic Bank. All of the liabilities for the deposits of First Republic Bank have been assumed by JP Morgan Chase. And apparently, if I remember correctly, they're going to split the losses 50-50 with the FDIC. So the FDIC is bailing out everyone who had deposits at First Republic Bank, but I guess JP Morgan is bailing out the other 50%, and at the end of the day, JP Morgan is going to get all of the assets of First Republic Bank, whatever performing assets, are left. Because the problem, I would assume, for First Republic is partly that they have quite a bit of non-performing loans, things on like commercial real estate in the Bay Area, perhaps, where people are fleeing in droves. But JP Morgan Chase certainly will be have no problem meeting the demand for outflows from First Republic, because First Republic's deposits, I would imagine, I didn't look up the exact numbers, but they've got to be minuscule compared to, JP Morgan Chase, so they should be able to absorb those just fine, and then, JP Morgan Chase is able to get all of their, performing assets. But from what I understand, JP Morgan Chase didn't actually, pay directly. They didn't have to buy First Republic. It seems like they're being loaned from the FDIC or something like that. I don't quite understand it. I have to do more reading on the topic. But all you have to know is that Jamie Dimon is happy. And so that's a pretty good indication that some corrupt bargain was struck. For those of you who may not remember, back when all of these banks started collapsing, Silicon Valley Bank, before even it went under, Jamie Dimon was apparently whispering sweet nothings into the ears of their major depositors and encouraging them to move over to JP Morgan anyway, because of, of course, people would feel much safer, much bigger bank than Silicon Valley Bank, and he was telling that, to their current depositors, hey, get your money out of SVB while you still can. And so as these smaller regional banks continue to collapse, there does seem to be one man who is benefiting more than anyone. And as of right now, nobody really has lost except for shareholders, especially if you were a shareholder in Credit Suisse or a bondholder. Bondholders, some of them got wrecked even worse than the shareholders. Now, none of the underlying problems that caused any of these three banks, SVB, Credit Suisse, and now First Republic, to fail, none of the underlying problems have been dealt with. Of course, the most glaring one is the Fed hiking interest rates to 5.25%. That is not usually something that is conducive to perpetuating credit bubbles. When you have low interest rates for a long time, let's say, over a decade, just throwing that number out there, and then you hike rates in a matter of months up to 5.25%, history shows that doesn't really end well. We have the most recent example of 2008, where rates were raised from 0, and we're only down at 0 or 1%, something like that, for a year or two, I think. And then the Fed started to hike rates. They got up to 5, I think. I don't even think they made it to the side of 5.25%, and everything started to fall apart. And so what we're witnessing in the collapse of these 3 banks are things starting to fall apart, and they're just sweeping it under the rug. That's all this is. They're not dealing with any of the underlying issues. Now, I'm not saying the Fed should cut rates, although I think the Fed probably will by the end of this year. I don't want the Fed to cut rates. I would like to see the bubble collapse. I would like to see asset prices, be somewhere in the realistic range. I think that housing prices should fall to, the long-term average, back to the 100-year normal level, back where they were in, let's say 2013. Housing prices back then, they were about where they need to be. They weren't cheap in a historical sense, but they were about where they need to be. Same thing with stock markets. Can we get back to a realistic PE ratio? Can PE ratios start to matter again? Remember the term, discounted future cash flow? Remember when earnings mattered? Remember when you could, save your money at a bank and accumulate real interest? These days, you have to hire some fancy investment advisor with a high management fee. Go to a hedge fund just to hope to achieve the same level of returns that a few decades ago ordinary Americans got in their savings accounts. It used to be in this country that you could just save a little bit of money every week for a few decades of your working life. And eventually, by the time you were in your, 60s, early 70s, you'd have plenty of money stored away just in your savings account to live off of for the rest of your life. So preserving the stability of the existing system is not going to bring any of that back. I don't want to perpetuate the status quo of the last 10 years, where everything just becomes more and more expensive. Numbers keep going up just because that's the way that the numbers are supposed to work. Everything's just supposed to get more expensive. The cost of living is supposed to go up every year. Everyone accepts that. So what? The house that your grandparents paid, $11,000 for, is now worth $1 million, and you can't pay the taxes on it because you're being taxed on, an $11 million property. You can't afford to even go out and, buy a truck and, get a job, working on houses as a subcontractor, let alone getting your contractor's license and, making, starting a big business for yourself. Just being a subcontractor, maybe hanging drywall or something like that. You can't do that because a stripped down, white pickup truck runs you about $50,000 in this country. Want to buy a used truck that's, 20 to 30 years old? You're looking at $20,000, $25,000, depending on the condition. If you buy a nice one, closer to $30,000. And that's for an old beat-up truck that somebody's been working out of for multiple decades. Hey, you recently graduate college, want to move out of your parents' house, be an independent adult. I hope your first job out of college pays you 6 figures, or else you're not going to make rent. Maybe you'll be able to rent a place if you get like 5 roommates. Then maybe you'll be able to just barely get by. But if one of your roommates decides to move out because they lose their job or something, or just because they find somewhere better to live, you're all screwed because you're not going to be able to make up for his share, and then you're going to have to go back to living in mommy and daddy's basement. And so when I hear Jamie Dimon say that the banking system is safe and everything's fine, that's what I hear. And by the way, I'm not just projecting on all that stuff. I'm not just throwing all of my own personal grievances, at Jamie Dimon and saying, Jamie Dimon has made me poor. This is just what I'm coming to think of. These are not personal experiences. These are just examples. Okay, I don't have a $1 million grandparents' house, that I can't pay the property taxes on. You know, I don't have trouble getting a truck. In fact, I've got a couple of trucks, but I lucked out. You know, I bought them young. I mean, I bought my first truck before I could drive because I knew that they were just going to keep going up in value. Paid $2,500 for it at the time. It's probably worth at least 12 grand now. I've been offered 10. You know, but why would you ever sell? That's the problem. When asset prices go up so much, nobody's ever going to want to sell, because what are you going to do with the money? The money's no good. You can't go and replace it. The only reason you'd ever want to sell your house is if you're moving to a completely different place, because, you know, if you're trying to buy a house in the same place, you know, whatever you sell your house for, it's too hard to get a house anywhere. Your odds are you're going to have to settle for a house that's not as nice as the one you sold. And nobody's selling their house, you know, to upgrade, to go to to move into a nicer neighborhood, because, you know, the income that is required to live, you know, in their current neighborhood is, I'm sure, going up much faster than, you know, than their own salary. You know, if they're just, you know, working a normal job and getting raises occasionally, or, you know, maybe they got that big promotion, you know, that big business promotion. Guess what? It still wouldn't pay you enough to buy the exact house that you're living in today for you to buy it now. So you're not going to be moving into a nicer neighborhood. So here's to hoping that more banks continue to collapse, and that the contagion spreads, and that we get a repeat of the 2008 financial crisis. And hopefully they're unable to stop at this time, and asset prices can truly crash and find a more realistic floor. Because, hey, think about it. If the stock market crashes, then it might actually make sense to buy stocks. You know, could you imagine a stock market with realistic P/E ratios? Could you imagine a stock market where, you know, where stocks paid actual decent dividends? Could you imagine a stock market where all the companies weren't just taking the money that could have been paid out to shareholders in the form of dividends and just buying back their own stock? Imagine a bond market where you didn't have to buy total toxic waste junk just to get a yield above 4%. Now, currently, we're getting above that, so I guess we at least have that. You know, rates are up a bit for the time being, but as of right now, you know, there's always that risk that the Fed's going to come in and just knock rates down again. So, monitoring the situation, and I guess I will keep you folks in the loop to the extent that I'm in the loop. So with that said, I will see you folks back here tomorrow.